Business goals can be simplified by focusing on a few must-know numbers. Break-even is one such must-know number. Let's go back to our income statement and calculate the break-even point for our newest numbers. We start by determining our total fixed costs, adding the selling cost and the general administrative and overhead cost. We divide by our gross profit percentage. As it turns out, we need to make $40,000 worth of sales just for the business to break even with its costs. If we wanted to, we could calculate the number of units we would have to sell to break even. Remember, your units do not have to be physical items. You could, for instance, sell labor hours. Let's say that you sell service hours for Reliable Plumbers Incorporated. Let's keep things simple and say you sell all physical materials, like sinks, at their supplier cost, so that you don't make any profit off of them. So your unit cost is labor, and let's say you sell a plumber's labor at $50 an hour. We take the total break-even number and divide by the unit price. Our simple formula reveals that you need to sell 800 hours of plumbing labor to break even with your expenses. Brackets are bad. If your income statement results in a negative number, they are displayed in accounting form with brackets. Move fast to correct and make the business positive. Take the following scenario. Now let's see January's income statement. On the left side, this scenario has been recorded using the cash method of accounting. On the right side, using the accrual method of accounting. Notice the effect of the two accounting methods, particularly on gross profit and net income. Proper income statement design yields future benefits. You would not build a home without a blueprint. You must design your chart of accounts properly to build an effective information system. A chart of accounts is a listing of the names of the accounts that a company has identified and made available for recording transactions in its general ledger. The organization has the flexibility to design its chart of accounts to best suit its needs, including adding accounts as needed. The organization chart can serve as an outline for the chart of accounts. Each account in the chart of accounts is typically assigned a name and a unique number by which it can be identified. Each digit typically represents a division of the company, the department, the type of account, etc. The key here is the ability to track down to a job or product level. As we alluded to when we first showed the hierarchy of accounts, the trial balance has inputs into the income statement. We will now explain the trial balance in more detail. A quick and regular review of the trial balance will help you identify potential accounting problems early on. If the total debits and total credits are not equal, there is an error in your accounting process. A common simple mistake involves the posting of debit balances as credits, and vice versa. Let's take a look at an example trial balance. The trial balance is the aggregate of the balance sheet and current period income statement balances. Those documents encapsulate and summarize several lines of data seen here, while incorporating key formulas to calculate statistics like gross profit and net income. Every financial transaction is first recorded in the general ledger. Just as the income statement had inputs into the balance sheet and the trial balance had input into the income statement, so too the general ledger has inputs into the trial balance. We will now explain the general ledger in more detail. Brackets are bad. If your income statement results in a negative number, they are displayed in accounting form with brackets. Move fast to correct and make the business positive. Here's a small snippet from the general ledger. Among other transactions occurring in January, we see an invoice issued to Beacon Contractors and a payment received from Beacon Contractors. Say it with me now, for every debit, there should be a credit. This depiction illustrates the process of reporting from the creation of the chart of accounts to the financial statements. The balance sheet is your most critical financial report. On the T account scale, debits are on the left and credits are on the right. Assets equals liabilities plus owner's equity. Cash is normally a debit balance. Brackets are bad. Successful managers watch percentages. Successful business managers know their break-even sales level. Business goals can be simplified by focusing on a few must-know